Today is Monday, January 25th, 2021, and I am your host, Max Gottlich, and I talk about my interpretations and insights into financial markets and the global macro economy. Well, it is a very toppy stock market indeed, as bonds are getting some skin in the game and the dollar up from its lows. And of course, the VIX volatility index or the fear index, it's been climbing. It's been climbing higher over 25 today, after today's big vol spike. And the concerning economic data that we've been talking about, and it's been coming out throughout the world, it may finally be reflective in capital markets like we've recently seen with European equities. Everyone has heard about the recent 145% parabolic move in GameStop. And in fact, today it had more dollar volume than the largest traded ETF, which of course is the SPY, the Spider S&P 500 ETF. In fact, throughout the trading session today, GameStop gave up pretty much all of its intraday gains, despite its 150% squeeze. Pretty much as individual traders from Reddit and other kind of trading chat rooms like Wall Street Bets, and they tried to squeeze hedge fund shorts. And so this search for yield narrative I've been talking about quite a lot in this channel. It's extremely real and ongoing throughout different individual securities, which generates individual short squeeze manias like Bitcoin and Tesla and Kodak and much more beyond that as well. And all of these moves aren't necessarily orchestrated by institutions, but rather retail investors, or speculators that continuously try to squeeze out the stubborn shorts, or really in this case, institutions and hedge funds. And the problem with the famous quote unquote irrational exuberance, this phrase irrational exuberance from Alan Greenspan in his speech he gave in 96, is the fact that in the long term, the slope of the stock market is essentially a 45-degree angle to the upside. And that's been proven so for hundreds and hundreds of years backward, many generations ago. It always goes up with short-term retracements to the downside, which of course compensates the long-term uptrend of higher lows. So ask yourself now, why are people like Warren Buffett and Charlie Munger the biggest, most successful investors in the world? Well, because they are investors and they understand everything about compound growth over the long term. But traders don't comprehend this ideology, because they obviously want liquid dollars now, not later. So it's a time effect. And so as the Fed inflicted asset price inflation starts to potentially deteriorate and inevitably come stumbling down, we do see inflation expectations rising. I've noted that quite a lot in this channel. And specifically, we did see prices received for finished goods on a 6-month outlook jump to its highest point since 2017. And headline CPI inflation in the UK rose in December, primarily because prices in factories, PPI inputs rose as well. With obviously that's the driver of that rise in headline CPI. But let's talk about QE. And even though Japan, they've been doing it since '01 and it didn't work, they've been doing it longer than the US. And the US has done it 4 times since the crash and burn of Lehman Bros. And it still hasn't worked to this day. But clearly central bankers are telling a different story because they continue to screw up the repo market system on the collateral side, which we saw in March of 2020 and 2019 as well. And all of this obviously is tied to the largest ever wholesale shadow banking system in terms of the Fed performing QE. Now, I want to narrow down on the search for yield and FOMO trading narrative this year, as the more recent crowded trade we've seen, not just in energy, well, there's so many places, but notably in the Russell Small Cap Index. And nobody saw new highs coming for this index, never mind all other indexes. That goes for emerging markets as well. But small trader call buys are at an all-time high in the New York Stock Exchange volume. But this graph, it clearly shows that nobody cares about fundamentals. Of course they don't, because we're in a price-driven market. But people buy what is cheap and they hope for a higher return than they would in a savings account. They're desperate. And let's compensate the asset price inflation with the parabolic rate of change in M1 money supply, which is, of course, comprised of demand deposits and cash and checking accounts and stuff like that. Money is flowing extremely fast in all aspects, and yet the velocity of M2 is only just above 1, and the money multiplier continues to decline, which means the money supply is growing slower relative to the monetary base, which theoretically means headline CPI should go lower, or we should see deflation. But keep in mind that in 2021, this is an interesting figure because we've already seen, just a few weeks in, we've already seen $150 billion of merger and accusation transactions, announced globally. And according to Bloomberg data, that's a 50% increase from the same period last year. That is insane. And guess what? Most of this 150 billion is financed. It's financed with debt primarily, not so much nearly at all of cash. All right, so this is all I wanted to cover for today. And if you liked the video, please hit the like button and subscribe. If you haven't already, please note I am not a financial advisor, and everything I say is for informational and educational purposes only. All right, thank you, everyone.